The Hindenburg Omen has a reputation for identifying periods of increased correction risk. For the Russell 2000, two fresh signals have appeared within the last 30 days, lifting the rolling count back into positive territory. While not a crash forecast on its own, it highlights a market environment where internal conditions no longer align with a healthy advance. The indicator combines several breadth and momentum components, including new highs, new lows, the 50-day trend, and the McClellan oscillator. When these factors deteriorate simultaneously, it suggests that the market is experiencing internal conflict. Leadership narrows, internals break down, and momentum weakens beneath the index level. Each signal remains valid for 30 days, which is why a rolling 30-day count is used. Clusters matter more than single events. One reading may be noise, but multiple signals in a short period indicate that structural weaknesses are spreading. Historically, clusters of Hindenburg omens have often preceded stronger pullbacks and corrections, particularly when small caps are already in a vulnerable trend. The recent readings for the Russell 2000 therefore deserve attention, not because they dictate an immediate outcome, but because they signal a shift in the underlying health of the market. This is where the indicator becomes most valuable from a risk management perspective. Do you want to follow the Hindenburg Omen for the Russell 2000 and 27 other global markets and sectors? Check out our research at WallStreetCourier.com and make sure to follow our channel for more market insights.